What is up, YouTube? Welcome back to Stocks by the Numbers, and today is Monday, of course. Market's been closed about 90 minutes, but there was a company that we looked at a couple of times here on this channel that I said, in my opinion, looked pretty decent in the fundamentals. I saw some long-term growth down the road, and also this was a very cheap stock. We originally looked at it. It was only at about 3.25, and the company paid a dividend along the entire way here, but the stock, as you see, hit new 52-week highs today. $5.24, closing at 514, up 8 cents, about 1.5% on the day going into these earnings. And it was originally brought back to you here on this channel, was all the way back in 22. And what do I always say? I say that, in my opinion anyway, I say that when you're looking for long-term, quote-unquote, secure growth, so to speak, right? Something that we have high conviction in. Something where we see the growth coming years down the road, and it will inevitably translate, more than likely, to a higher share price, which of course is going to show us whatever it might be, 20, 30, 50% growth over the next 1 to 5 years, whatever we're looking for. But Safe Bulkers here, again, there's a shipping company, and this stock right now, $573 million market cap, in my opinion, could still make the argument it's undervalued. We have a dividend being paid out, currently yielding about 4%. We have a PE of 8.25. And of course, look at that beta as well. So in my opinion, this is what I mean. This is a situation where fundamentally you could kind of begin to make the argument for the quote-unquote perfect storm, where you have all of the main metric indicators could be potentially pointing to undervalue. And I know that was kind of all over the place, but again, the company, looking at the earnings here, beating on the EPS side, bringing in 20 cents a share off estimates of 19. And we can see that on the revenue side, estimates of a touch over 75 million. The company comes in with 81.66 million. Very nice beat on the revenue side. And you can see we dip down here going into 23. Now we're coming out at the tail end, hopefully rising even more going into 24. Looks like Q4 is their best quarter though, but even over the years, we can see the revenue has been bouncing around, but we were down here at sub 200 million. Then we made the jump to almost 350 million, and we end up closing out 2023 slightly sub 300 million. So we technically did drop year over year with the revenue, and of course the net margin followed suit. But at the same time, it's still basically higher than where the company has come from. And of course, during this whole time frame, they're paying a dividend for you to own shares of the stock. But even going back to where we first looked at it, right before I brought it to you guys on the channel, you can see the company had a nice beat on the top and bottom line. And then even after we had that initial drop down, after I looked at it, because of course, as I say, in my opinion, sometimes we have to deal with the short-term volatility, rising back up, breaking, dropping. We have to deal with the short-term volatility to get the long-term growth. And that's basically what you're seeing here. But looking at the earnings, you can see predominantly solid for the most part, right? Consistent beats on the top and bottom line. And we also have a situation where even if we have an EPS miss, in the past, we still have a pretty healthy beat on the revenue side as well. And you'll see coming out of that EPS miss quarter, the company beats on the top and bottom line. Then we go back to an EPS miss, but of course we beat on the revenue side, and then we come out of it with an even better beat, in my opinion, on the EPS side. Still beating on the revenue side. Right now we're bringing in 80 million potentially a quarter, and then boom, we have today's quarter, and they beat on the top and bottom lines again. So in my opinion, this will more than likely continue to grow. And I guess we can probably lean maybe towards it's a slow, steady grower. So even throwing out something like $7 from this point, you have to remember that's still 40% roughly from where we currently are. And you can see the company, at times it goes on its tears, but then of course it always has the chance to pull back. So even if we do a personal price target here, in my opinion, of maybe $7, it might take a couple of more months than we anticipate. But again, this is a very cheap stock. And this is why I'm saying the reason why I like looking at situations like this as well, again, in my opinion, is because only a small portion of your capital should really be used for speculative day trading and swing trading and a lot of the options trading. Now, granted, I know some people have strategies in place. They may be seeing, phenomenal success rates, 70, 80+% of the time when they run options trades. And listen, more power to you. Of course, I wish you the best of luck. I hope everyone makes millions of dollars. But realistically, when we come back to just a situation like, oh, Tesla dipped down, I'm going to buy some calls, or something like, Hershey might be overvalued here, I'm going to buy some puts. We do have the potential to see some nice returns. But again, usually options trading only seems effective in the moment when it's actually working. And then when you begin to take, potentially 2, 3, 4 losses, or you start to miss more of your trades, or you're consistently getting stopped out, maybe your timing's off now this week or something, whatever it may be. In my opinion, the main goal should be to not only preserve the capital that we have in the account, but also to have it grow for us over time, but in a situation where we might not have to watch it like a hawk, where we can literally add to a position over time, get on some dips, have it come back down to where we originally bought it. Maybe we have more capital, we step in, we buy again. Up, now we're climbing back up. We have earnings coming out soon. I'll add to the position a little bit here in the high 3s, and boom. Now overall this time, now the stock is up at 5, right? And of course, potentially you had the drip going on the entire time. Again, DRIP stands for Dividend Reinvestment Program. So this is what I mean. Over time, in my eyes, this actually seemed like a solid grower. And again, we had our swings down, we had some rallies up, but even here at 3.25, hypothetically, you went all in, let's just say. You're up like 60% right now. And like I told you, even some of the best advisors on Wall Street, when you add up all the winners and the losers of all the positions that they may, advise their clients to take, again, at the end of the year, they may only be seeing 10, 12, 15% on year-over-year growth in their portfolio. Meanwhile, you found a position like this flying underneath the radar, could have been viewed as very undervalued and attractive in the numbers, and now boom, now you're up 60%. And yes, it was slow, it was boring, it wasn't always trending every day when you pulled up your account, but growth is growth. And this is why, again, when we're talking about leaning potentially more of the capital towards the longer term grow game, in my opinion, it's companies like this. But again, being on the top and bottom line here, but I wanted to show you also so the debt has been increasing, but again, what they're doing is they recently sold like 1 or 2 vessels, but they're putting in orders for new vessels over the next 1, 2, 3 years, with deliveries slated to come, I believe, maybe 1 later this year, and I think 2 in 25, and maybe another 1 or 2 in 26. But I wanted to show you, see, first of all, number of vessels at period end, you can see we're up to 47. That's the highest it's been over the last several quarters. Seems to be maintaining and consistently growing as well. But more importantly, look at the average age of the fleet here. So we were up a little over 10.5. And you can see we've come back down to sub 10.2. Now, as of this last quarter, almost 10 even. So what we're seeing here, in my opinion anyway, the way I'm translating it, is that we're rolling over our older vessels, and we're, taking on a little bit more debt to step in and buy a handful of newer vessels, which of course are going to be younger, and we're going to have that longevity down the road. So they're setting themselves up, in my opinion, what looks like, they're looking at future revenue growth that they're going to be bringing in 2, 3, 5 years from now from building up, this younger fleet, as opposed to what we're immediately seeing quarter to quarter, which unfortunately is how a lot of not even traders, it's how a lot of investors unfortunately view the situation. And remember, we have these ups and downs when we're dealing with business, basically across the board in every industry and every sector. So this is why I'm saying you have to potentially deal with the short-term volatility to look for the long-term growth. And even a situation like this, I think I may have looked at this company in a video here, but it looked like what was almost setting up to be an ascending triangle. So when I saw the stock up here now, after running down to the lows here, a sub 2.5, and then rallying all the way back to about 385, like I said, the way it was bouncing around, in my opinion, it looked like we were going to potentially form an ascending triangle and pop up to above 4. However, you can see as we were nearing the apex, we bounced off that bottom trend line, right? We got back to like mid-range. But what happened? The company came out with earnings and we happened to have a miss on the EPS side. But it happened to break the channel. And this is what I mean. This is why, again, technicals and looking at the charts also in and of itself doesn't necessarily set up a quote-unquote sure move. Right? And I was following the trend line down here. Of course, it broke for a second and then came right back up. But, you know, even if we do something like this, we can say, oh, we had an inverse shoulder, we had our inverse head, and we had potentially our next inverse shoulder. So, boom, we break up to the upside. Inverse head and shoulders, bullish. Head and shoulders pattern on the top, coming down to the neckline, breaking, dropping, bearish. Always good to know the patterns as well. This is what I mean, but we can try to spot the patterns, but sometimes it just doesn't happen. And I know in this case, the EPS came in light, so we saw a breakdown as opposed to a pop up. But again, even if we saw this pattern taking place and the earnings weren't here at this point, again, anything can happen. So we know that technical patterns are not 100% supposedly, even though, you know, I put a lot of stock into the fundamentals. And I know a lot of people tell me all the time, well, you know, you're just looking at the numbers, but the chart's showing this, you know, the RSI is here. So, you know, we're going to go up instead of go down like you think. And again, understandable. This is literally why we make the YouTube channel and we have these discussions, right? This is what the comments section is for. To have that back and forth, you may potentially see something that the next guy is not seeing. Maybe he was about to go all in, but you were expecting a break here, right? So instead of, you know, someone going all in at 360, now they're able to go in, you know, down here at 320, and they're able to save themselves even that much more of a loss and eliminate a little bit more stress, knowing that they got a company they liked up here at 360, but now they got it at even cheaper, so they feel more secure now, right? They feel quote-unquote safer over the longer term because they have a decent company at an even better price. And again, I know we always used to talk about pricing and timing, but you guys know as well as I do that these sell-offs are sporadic, whether we're talking about the markets overall or we're talking about an individual stock. So, you know, we just have to we just have to pick our points, pick our spots, and that's why, again, I like the strategy of piecing our way in, slowly adding to the position over time, every month or two, whenever you might have some excess capital, whatever your financial situation is. But again, the idea, in my opinion, is to find good growers and keep an eye on them. And then when they dip down, we buy the dips and we slowly build a position, accumulate shares, and then hopefully over the long run, boom, we're in a phenomenal situation. But yeah, just wanted to give a quick update here on Safe Bulkers because I was going to speak about them actually earlier this afternoon because the stock, of course, hit a new 52-week high. But then I saw earnings were coming out, so I said, you know what, let's hang out. Let's see if they do happen to report another strong quarter. And they did. Safe Bulkers, ticker symbol SB right now, even though we hit highs, we're still talking about a $5 stock that, in my opinion, will continue to grow over time and still pays you a dividend to own it. So this is why, yeah, that's my keyboard. I don't know what kind of keyboard this is, but apparently it's a piece of crap. It keeps like disconnecting, reconnecting on its own. But we can see here, looking at stock charts very quickly, stock went up to 524 and pulled back here at the close, 514, top Bollinger Band 513, right? So after bouncing off of this 50-day moving average, you can see we've basically been on the up and up, right? And I told you, when stocks have big moves up or big moves down, the Bollinger Bands begin to trumpet. See, even here, as we were climbing high and riding the top Bollinger Band, you can see how on more of an angle it rose up. And you can see here on the bottom, see how it dropped down. So they trumpet out. And then as the stock continues to climb, it slowly climbs up. And then when the company goes into a consolidation period, that's when it really chunks up. And then you can see the tightening of the Bollinger Bands. And usually, in my opinion, what I've seen is that that's when a break up or down will happen on the tightening. But here we're seeing, again, we're seeing the rise, and you can see the trumpeting of the Bollinger Band starting to begin. So in my opinion, it could hang out and maybe just go flat or slightly be up 1 or 2 cents a day, but it could hang out and wait for the Bollinger Band to continue to rise while the bottom one is curling and coming up. But also, I speak about slow and steady growers, and if we look at a situation like this, we can see going back to September, October, even November of last year, and we're talking what? Only 6 months ago. It sounds like, holy crap, 6 months. Imagine holding something for 6 months. But again, at the end of the day, if we, in hindsight now, had a time machine and we go back and I say, yeah, the stock's at 3 now, but it's going to be at 5, chances are you'd say, wow, that's a great move. I'm going to, put a chunk of my capital in there. But of course, we don't have the time machine. But if we can find decent growers at good entry prices that are fair valued or potentially discounted, we can step in and ride that eventual wave. But we can see October, November, look at this 50-day moving average down here, 310, 315, 315. Now moving average is almost $5, sitting here at 481. And the 200-day now starting to gain even more momentum here with the stock not only breaking into the 4s, but of course holding, consolidating that level, and then taking the next leg higher towards the high 4s and the low 5s. So now we have our 200-day moving average going back to September. Again, what's that? 7 months ago. And we can see about 315. Now we're at 379. And this is why I say, again, in my opinion now, if markets do begin to sell off or the company starts to slow down and people maybe just all want to start taking their profits at the same time up here, what we're going to have is potential new support levels of these moving averages that have now increased, right? So back here, we were around the moving average and we could have broke into the low 2s, and you really could have been exposing yourself to even more percentage risk, so to speak. But here again, as the moving averages climb up, making potential new support levels, you are potentially risking less now as the stock has become more solid and more stable, in my opinion anyway. But RSI here on the daily up here at 66.5, which is why I'm saying we could maybe potentially have like another up day, slightly maybe, a couple of cents, but the RSI may potentially hit that 70 benchmark and we could start to flatten out or maybe even pull back and retest this mid Bollinger Band now, which is probably going to slowly come up to about that $5 mark. So in my opinion, it should really hold this $5 level here. And yeah, moving forward, I don't see really a big reason as to why it can't eventually hit 6 and then, slowly 6.5 and potentially $7 down the road. The MACD, we can see it, we really swing over time here, but we can see that we were trending downward. The stock started to sell off here, but we bounced off of that new higher 50-day moving average, and then the stock got strong again, and we can see that the MACD also crossed to the upside. That obviously added to the momentum as well. Switch over here to the weekly, and we can see even on the weekly, we can see the RSI up here a little over 69. So that's what I mean. We have gotten above that 70 benchmark before, but as you see, not really for that long. That's why I'm saying we could be up here and top Bollinger Band here, 543 on the weekly. Maybe that's a little high in my opinion, but we definitely could potentially pop up again, retest maybe like that 525 to 530. And then basically what we had here, kind of like slowly start to step down for a couple of weeks, and we can bring that RSI, back to a more attractive level so that hopefully new money comes in and drives it up and takes it the next leg higher. But we had the MACD also rising up. Looks like we're potentially flattening, and depending on if the company does begin to sell off, we could potentially have a cross, which could bring us back down maybe to the mid Bollinger Band here on the weekly of about 4.5. But the moving averages here showing the same story over an even longer time frame, right? We have our 50-day moving average here. This is basically summer of 2021, and our 50-day moving average off the screen, right? So it's down here at like 170. And then you can see we had our pop up, we came down with the stock, and now we're on the way back up. And now the 50-day moving average is at 375 from sub $2, right? So our moving average is up roughly, our 50-day moving average is up roughly 100% over these couple of years. And we have the 200-day moving average as well, sitting here a touch below $2 a share. Now we're up to a little over $3 a share. And as the company had a big sell-off here towards the tail end of 22, we came down, tested that moving average, and then had a strong rally and bounce coming off of it. But even over the longer term, in my opinion, I like it as of late, because you can see really it looks like here around 23 is where they kind of began to gain a little bit more steam. And you can see that coming out of the new year after the bull dropped, we got back above that 50-day moving average, and it consistently tried to retest, but held up strong, and then continued to climb up, and now we're at $5 a share. So again, in a situation like this, even though I liked it down here, we initially dropped down. And that's what I mean. As a trader, you would have said, this guy doesn't know what he's talking about. Look, stock went down. He said, he liked it. Fair enough. But at the same time, it did rebound, reclaim that value, and then go even higher. So this is what I mean. Even a situation like here, this guy was talking about the ascending triangle, and look, it happened to break down instead of up. This guy doesn't know what he's talking about. Yes, in the immediate short term, it is very difficult sometimes to time the exact move, because, let's call it like it is, if it was possible to do it very consistently, we would all be millionaires. And like they say, if it was easy, everyone would do it. And granted, there are a lot of people doing it, but also at the same time, the average person loses money. So this is what we mean when we say, of course, anything can happen. And that's why if you maintain, regardless of what your strategy is, whether you agree with the way I look at it personally or not, if you are implementing a strategy and you're holding that 70-80% success rate consistently, then by all means, continue doing what you're doing, but always, continue to expand your knowledge, look at different viewpoints, try to understand, different strategies as well, even if yours is working. Even if yours is keep an open mind. Keep an open mind, that's what I would say. But overall, let's not go on longer than we have to. So safe bulkers, again, in my opinion, probably going to continue climbing up over time. And I just wanted to do a quick update because it's a cheap stock that pays a dividend that has been looking good since we first looked at it. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets, they're rocky, they're volatile, they're very uncertain, even when we think we have the setups. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.